Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of Paymentology, Jeff Parker. Great to have you with us.
Great to have you. Great to be on board. Thank you.
All right, so Jeff, before we get cracking, let's learn a little bit more about Paymentology. So, Jeff, you're one of the leading global issuer processors, but tell us more about the business and what sets Paymentology apart from others in the same space.
Sure. So we like to call ourselves the next generation issuer processor. And really, that means that we're helping fintechs and banks around the world to launch, manage, and grow their card programs. We have a proprietary technology stack, which we own end to end, which gives us great flexibility around our roadmap. We're incredibly fortunate to have clients live in 68 countries around the world, which makes us the most global of those modern issuer processors. But not only are we very global, we're also able to go deep locally. So in about 12 markets around the world, we integrate into local domestic payment schemes as well. So MADA in Saudi Arabia or J1 in the UAE. And that combination is quite unique. We're also very good in terms of digitalization and virtual cards and being able to tokenize those cards into Apple Pay and Google Pay.
Wonderful. Okay. And in May, I think as recently as May, you raised $175 million to fund your expansion. What specifically is the money for?
Yeah, so we were very excited to raise that from two private equity investors. The money really is to help us continue that growth, and that includes expanding into new markets. We'll launch into the US later this year, as well as to continue to build our product to enable our clients to innovate and differentiate. And of course, talent is an increasingly scarce resource. So we want to continue to bring best-in-class people into our business.
And do you need any more money to get into profitability or to expand to the extent that you plan to expand? Do you need to raise more?
No, this actually gets us a 5-year plan fully funded, assuming we keep that plan the same. We were profitable last year. We've taken a conscious decision this year to invest more, but we do expect to return to profitability over the next couple of years.
Okay, and I think you've already made about half a dozen acquisitions to fuel your growth. I mean, how do you knit all of those parts together into a coherent whole? And has the integration work been harder than kind of growing organically?
Look, it's a great question. You're right. The business today is really the result of, I guess, 3 major acquisitions and a couple of smaller ones. But integration is always a challenge. We did a couple of acquisitions to create, I guess, scale, but we also did some acquisitions around capability. We've made some great progress in terms of those acquisitions. So while it's not fully complete yet, I would say we're kind of 75% there. I think they were the right decision for us to get us where we wanted to go. But as we go forward, I think we're more focused on organic growth now.
Okay, and regular viewers of this show will perhaps recall, I think a couple of times we interviewed back in the day Marqeta, which is kind of, when I was reading about Paymentology, kind of, it reminded me a little bit about them. Of course, I think, if I'm not mistaken, they were acquired for a reasonably nice chunk of change. Is that something you think will ultimately be Paymentology's destiny, being acquired by another, financial services firm, or do you think you're kind of, going to grow big enough to stand alone on your own 2 feet?
Look, I think we're not thinking too much around that at the moment. I think the focus is very much growing the business following the raise. I think the asset is an attractive asset at the right point in time. It could be attractive to a number of different players. So I think that gives us some optionality in the future. But very much focused on just growing the business as it is for now.
Of course. All right. So we've heard about Paymentology. Let's now learn a little bit about Jeff. So, Jeff, I read, and often it's not so easy to get information about the personal lives of kind of fintech CEOs and founders, but we actually found some for you. So when you were growing up, I was reading you used to wash cars. You had a newspaper round, which for those who are kind of under the age of 30 involved, young kids going on bicycles and delivering newspapers to houses. And I think, obviously that may or may not exist in certain parts of it. But how did having those jobs as a child impact you? How did that help you become the person that you became?
It's difficult to know, I guess, what you'd be if you didn't do those things. But I think I've had jobs of some form from probably the age of 11, as you rightly say. I think sometimes I had 3 or 4 newspaper rounds. I think, what does it do? I think it builds a work ethic to you. It was always built into me that you generate your own luck, and that you should make things happen. I think, as I think now in terms of how I approach work, it's very much, I think you have to commit yourself fully to what you're doing to get something back. And so, maybe it wasn't a conscious decision in that way, but I guess my parents really pushed me towards being self-sufficient, I guess, and finding my own way. And that probably has, in retrospect, had a great deal to do with the character I am now.
And I understand you're also a keen cyclist. Would this be like a long distance kind of cyclist, a sprinter? What kind of a rider are you?
Yeah, well, I was fortunate enough to live in Australia for about 12 years. And so obviously the climate is very good. So I got into cycling following some football accidents with my knee. Very much a long distance cyclist, enduro cycling. I used to ride probably 300-400 kilometers a week at my peak. But returning back to the UK, the weather is definitely less supportive of that. So it's probably more of a casual cyclist now, but still very much enjoy it and have my folder prompting to get into and out of the office as well.
Well, I'm sure investors would be reassured to know that you're more of a kind of long distance marathon type person than a short term sprinter. And as a fellow cyclist in London, I can fully empathise with those challenges. Now, I appreciate you probably don't get a huge amount of downtime, but I've read that when you do have some, you end up watching Disney movies with your kids. What's your favourite and why?
Wow. So I have 3 young daughters, 3, 7, and 9. It depends on which phase they're going at, but I guess the all-time classic is probably Frozen. I think that's the one that seems to get played the most. I must admit, I'm probably not paying the most attention while I'm sat with the girls watching it, but I do enjoy a few of them.
You don't kind of empathise with any of the characters, maybe the snowman or Olaf or...
Yeah. Olaf is probably fun. Yeah, I think he gets lucky. I'm the lowest priority in my family, so it's probably the same there as well.
Okay. And I mean, just in general, I don't mean to stick to the theme, but I mean, I see you've got some swans behind you, so I don't know if there's like a kind of bird a preference that you have when it comes to cartoon characters. Any particular character that would be your favourite?
Oh, wow. Back in the day, from my age, I'd probably come up with a Tom and Jerry, which is probably a very long time ago. But the one I've seen the most is probably Bluey, which is the one my daughter watches the most.
Well, sadly, I missed the Bluey phase. My kids are already too old for that, but we had others as well. So anyway, wonderful. All right. So look, a key part of this interview, Jeff, is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with the CEO of Paymentology, Jeff Parker. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Jeff, let's talk about the future of finance. So, Jeff, what's exciting you and what's frustrating you about the digital payment space right now, and where are you seeing most innovation?
Well, great question. I think, what's exciting, and I think it's probably going to be similar, many people we speak to, I think, is the pace of change with AI. I think there's incredible opportunities for us to accelerate product innovation, increase efficiencies within our own business, but more importantly, I think drive enhanced products and experiences for our customers. And so I think that's super exciting. We're able to, I think, get prototypes out in customers' hands multiple times faster than we've been able to before. So it enables us to test the market. I think what we're also seeing is, I guess, an increased level of complexity around payment options, payment rails, payment choices. Stablecoins, obviously a buzzword at the moment. I think there's certain use cases which support account to account or cards, etc. And I think we're able to give those and package those up and maybe orchestrate some of those options for clients much more effectively, which I think is exciting as well. In terms of frustration, I wouldn't say it's frustration. I think there's a lot of more caution maybe in the markets at the moment. I think with funding being maybe a bit harder than it has been able to get before. I think customers are obviously, clients are looking for profitability much more than they were before. So I think that people are a bit slower to make decisions. And so finding the right partners that have the right ambitions than you can be more challenging than it was, but that's very understandable. And I think we're also seeing, I guess, with geopolitics and regulation changing, things are maybe a bit harder than they were, but I guess that also can create opportunities and excitement as well.
Wow, you've covered so many, touched upon so many subjects that I think I've got questions for all of them. But since you started by mentioning AI, obviously you've mentioned one aspect of what AI brings to the table, which is speeding up your ability to release new products. Of course, there are also issues whether it comes to fraud, both making it easier to detect it and perhaps easier to attack, financial institutions. And there's also the issue of the fundraising. So why don't we start with that? Because we talked earlier about Paymentology raising $175 million back in May. Of course, we're seeing eye-watering sums being raised all the time, most notably recently, Google with its, $80 billion or so, and SpaceX, I think, something, tens of billions as well. Does that still leave? Is there enough money to go around? Is it kind of now you're kind of relieved you've got that fundraising done, because the longer anyone waits right now, the less money there is going to be going around, which could be invested into their fintechs?
Look, I think in the part of the market that we play in, $175 million is clearly a reasonable, significant amount, especially for a European fintech. But I think the AI businesses are almost on a different planet at the moment, aren't they? And I think there's still a lot of capital out there. Look, if 3 or 4 of these big events happen, if Anthropic and OpenAI list as well as on top of SpaceX, maybe that puts a short-term dent in the available capital. But I think in the European market, I think there's still money to go around. I think it's just a flight to quality, I think, which is been accelerating over the last couple of years.
Right. And I mentioned another aspect of AI, which of course is on the fraud side of things. Are you noticing it kind of, attacks or potential attacks? And maybe you've been lucky and no one's kind of decided to kind of go for you, but are you noticing things becoming more sophisticated? Are you now feeling that you are better defended thanks to AI and ability to detect fraudulent behavior and patterns in the way that people perhaps use your product? Where's the balance for fintechs these days because of AI?
I think the reality is probably somewhere in the middle and a combination of both. I think in terms of Paymentology and our capability to detect fraud, it's certainly increasing, and we expect it to accelerate in terms of its effectiveness. We just launched our own, what we call a decision engine, which is quite sophisticated in terms of how it allows us to detect potential fraudulent activity. And we can layer this on with a number of market-leading partners out there to increase our defenses. But unfortunately, the way the world is these days is as fast as we move, the fraudsters are moving just as quick, if not faster. And we are definitely seeing more concentrated levels of attacks on some of our customers' programs as we go through. And I think there is a geographical split across that as well. I think we see, I wouldn't say necessarily more in one country than others, but it definitely goes through waves. You might have a period in this region versus it kind of seems to shift into another region. So I think from our process, we've significantly scaled up our, I guess, security team in the last 12 to 18 months, as we're seeing both the opportunity and the risks increase on both sides.
And you've mentioned some of the things that AI is doing. I suppose by definition, it's not doing everything else. But I mean, obviously, you can't just list everything that it's doing. But what specifically is AI yet to have managed to do or managed to achieve that perhaps people were hoping it would or one day will?
Look, I think the potential of it is phenomenal. In the people that I speak to in the industry, I think the rhetoric is probably more advanced than the reality. I think many people are still trying to really work out how best to use AI to deliver what they want. I think moving from rules based into very personalized predictive behaviors using data to foreshadow things exactly what you said around fraudulent behavior, etc. I think it has a huge potential. Is that widespread applicable at the moment? I think it's probably still only in pockets, but I think it has a massive potential. I think the new challenge that we're finding, and this is stuff is changing almost day to day, definitely month on month, is how you use the AI and the cost of using the AI. And so, from a personal paymentology perspective, up until 2 months ago, we were paying a subscription fee for unlimited usage, effectively on AI and the tokens. The charging structures of some of the providers now have moved to a consumption-based model. And so, rather than using the most sophisticated model in the world, which is very expensive and burns a lot of tokens to, do my meeting notes or draft me some emails, I'm having to be a bit more selective. And so, understanding how that works, it's very easy to get your AI budget completely out of control. And I actually, bizarrely, have heard some conversations happening recently as to actually whether people need to hire people rather than paying for the AI. It's a bit counterintuitive, but I'm sure over time as that settles, it will work. But you were seeing these top of the AI people are spending tens and tens of billions of dollars building these data centers and building their model. So it needs to economically work for them as well. And they're all obviously massively loss making at the moment.
Right. So maybe the salvation for, humans who are worried about losing their jobs is that the technology, certainly for now, is still so expensive that actually, maybe they're going to be a more economic, a more reasonable choice in terms of cost than the technology itself.
I think the way we look at it, I think, it will definitely work out. I think that AI is hugely value add and incremental. I think the message that we give to our teams is, who knows what jobs, maybe get put at risk through AI. But I think what we can almost guarantee that if you don't have the mindset to try and adapt and work with AI, that's going to put you behind in terms of, I guess, a competitive position. And I think it's in all of our interests to learn these tools and see how we adapt to them. And I think human nature over thousands of years has adapted, and I think has always, found new ways to use human intelligence. So I'm still pretty bullish about the availability of jobs despite of AI.
Okay, well, that's a reassuring thought. You did also touch upon stable coins as one of the things happening in finance right now that's getting you excited. It's been hailed by many as the next big thing, especially for cross-border payments. Would you agree with that? Is the hype justified? Is the industry ready? Are consumers ready? Businesses?
Look, I came from, before I was in Paymentology, I used to run a cross-border payments business. And I think many of those businesses, your Wise, your Revoluts, have built very efficient mechanisms to transfer currencies, money cross-border at scale, especially in the kind of the G7 or the main currencies. It's almost instant and real time in many cases. I think for more emerging markets, I think it's a really interesting use case. I think from a treasury management perspective, it's incredibly useful. And actually at Paymentology, we're seeing the biggest use of stablecoin being around currency volatility hedges. So, maybe someone in Latin America who's in a country where their currency is quite volatile, if they have easy access to a US dollar stablecoin, that means that they can hedge that currency risk super efficiently. So I think there are many different use cases, but again, I don't think it's a winner takes all. I think it's in partnership with what exists already. I mean, some of the existing rails are very efficient and effective in certain use cases. And so I think it's how do we almost orchestrate the combination of these to get the best in certain situations.
We've seen in the US, also in places like Hong Kong, Singapore, and now more in Europe as well, the regulatory framework for stable coins and digital assets kind of, being crystallized. Which regulators would you say, not necessarily specifically regarding stable coins, but which regulators in general would you say are helping fintechs build the future of finance, whether it's stable coins or tokenization or, whatever else it is? And which regulators are holding it back? I appreciate you may not want to put anyone's nose out of joint.
Look, I think, and again, this is changing quite rapidly. Yeah. So if we're having this conversation 18 months ago, I think we'd have probably said the US was quite restricted, but it's definitely been a change there. And I think they're being very proactive and forward thinking around that. So I think that's where a lot of the opportunities are happening. I think historically the FCA has been a pro growth regulator. I think it's taking a bit longer around stablecoin and how it wants to work. Europe, with the changes to MiCA at the moment, is creating a lot of people in that industry. I think we're a lot of concerns. I think we're coming up to the July deadline where I think there's going to be a lot of businesses potentially needing to find regulated entities to work with. I think more further afield, I think Asia is starting to think proactively around some of this stuff, but it lacks the historical framework. So I think it's taking a bit of time to come decisions, but it's challenging. But yeah, as you say, I think the landscape is changing. But probably the US is the most forward thinking at the moment.
Okay, interesting. Now, I think just earlier this year, just very recently, I won't say celebrated, but certainly marked the 10th anniversary of the UK voting for Brexit. So it's good that I don't have to ask Brexit-related questions most of the time, but I figured I'd make an exception, not least because you are also based in the UK. And yet at the same time, despite Brexit and the well-documented challenges that it has caused for the UK economy, London has maintained its preeminent place as the home for fintechs in Europe as a geographical entity. How has it managed to do so? And is that something that it will continue to be able to do, despite not being, for the moment, part of the, whether it's the European Economic Area or the single market?
Look, I think the UK has hundreds of years of a track record of being a very stable political environment. I think being English speaking with English.
Sorry, did you say stable political environment?
I think it has been until recently. Yeah.
Okay. Carry on.
Yeah. I think it's got a well understood legal regime. I think English speaking has been useful for it. I think its access to talent has always been and very strong, and that strong financial centre I think has supported a lot of that. I think what we've seen in the last few years is a number of other countries that are starting to see that fintechs and provide opportunities for them. France, for example, I think has become very proactive in this space recently. The UK is not helping itself, from my perspective, with, as you said, the lack of stability in the last in the last couple of years. But I think if you just look at the raw ingredients, I think the UK has very good ingredients. I think there's some things it needs to potentially fix from my perspective. But I don't see at least in the short term, a situation where the UK is not an attractive place to invest in.
Okay. Well, we are now coming up to our round of rapid fire questions. Are you ready, Jeff?
Let's go.
Okay, excellent. So I've got 90 seconds on the clock. That's why I've been fiddling around with my phone. We will get through as many as we can. One-word answers is all I'm looking for. And if the alarm goes off while you're in the middle of an answer, then we will finish that answer. So I'm going to start the clock and away we go. What fintech segment has the biggest potential over the next 5 years? One-word answers. Just throw it out.
Cross-border payments.
What is the biggest pain point in your everyday financial life you would like to see resolved?
Wealth management.
Are bank bosses ready for the AI revolution?
No.
Are customers ready?
No.
Have regulators in Europe and the US kept pace with all the new behaviors and possibilities we're seeing in the financial industry?
No.
Have you personally ever invested in crypto?
Yes.
How are physical points of sales part of the future of finance?
Yes.
Are bank branches part of the future of finance?
Not really.
On a scale of 1 to 10, 1 being the least likely, 10 the most likely, how likely is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank out of 10?
10.
That central bank digital currencies, CBDCs, will become a mainstream reality in the US or EU?
6.
That you'll be able to open a crypto account at a top-tier bank?
9.
That SWIFT will still be the main tool used for transferring money around the world?
7.
That a new card or non-card based rival would emerge to challenge Visa, MasterCard, Amex and the like?
4.
And that we'll see a top-tier bank or insurer bought by a fintech?
8.
Wow, good timing, Jeff. Wow, it's not often we get through all of them, but I'm pleased to say that we did. But that is all we have time for our round of rapid-fire questions and, sadly, for our conversation. So I just want to thank you, Jeff Parker, the CEO of Paymentology, for taking the time to speak with me today. Thanks so much.
Thank you very much indeed.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.